Welcome back, everyone. We're back to another podcast here. Today, I have very interesting, as you guys can see on the screen already. What is this, right? We know that this is Bloomberg. And this is one of my fellow colleagues here that I've met not long ago. And we've been in touch for a few days, couple weeks already, I think. I'm very happy that he accepted the invite I've done to him to come on board and have a chat with us here at ACY Cast. Now, before we start, please, if you want to keep seeing this type of content, please hit the subscribe button, give us a thumbs up on this video, and share this video with your friends. Now, Adrian, welcome, man.
How's it going?
So tell us a little bit more about you, because I know you, but they don't know you yet. So tell us, you have a Bloomberg there. Like, what is happening here? What do you trade? Tell us a little bit more about yourself.
So essentially, I'm actually pretty young myself. I'm only 19, but I got into the markets fairly early. I got in through crypto, actually, which then led me down through a whole journey for commodities. At this point, I'm actually more so, my operation sort of involves physically planting, say, agriculture like corn, while I hedge the position or, double down on the position through futures. Same thing I do for metals. And essentially, I'm more so in a view of a commodity supercycle these next few years. So that's sort of why I'm solely and mainly trading the commodity sector. I do dabble, here and there on foreign exchange, but something like dollar yen, dollar Turkish lira, but I'm just primarily focused on commodities.
Right.
And basically, a big reason for that is back in 2021, the Basel III Act sort of came into place, and this Basel III Act sort of it requires 85% backing of and if 85% backing for central banks. And they're obviously, to me, the main way they're going to get that 85% reserve backed is through gold, obviously.
Of course.
Which is why I also think that central banks have been buying, since as early as 2021, 2022, 2023, and the demand in 2024 is still here. Okay. So that's exactly why I sort of have a macro view on this. So even we have,
Pause there. So basically, you're saying that the biggest players on the world are buying gold.
Correct. I would say most commodities.
Okay.
I wouldn't say all commodities, but I would say most commodities are going to be heading into a commodity super cycle. Things like gold, copper, silver, corn, wheat. Okay. I'm seeing a lot of moves to be on the board, especially these upcoming years, months. And the main reason for this is I believe that inflation is still going to be a lot higher than they're projecting. These cuts, I don't believe that we're going to see a cut.
Yeah.
So to me, that's exactly why I have a macro view on this, because even like yesterday's meeting with FOMC, it's, they're still talking about a cut, getting inflation down to 2%. But to me, that's kind of bogus. And it's exactly sort of
that's why I see. That's what they have to say, right, Adrian? Because otherwise, the market will react too strongly, and the Fed. I actually wrote a report today. Probably is not published yet, but I've wrote a report saying that the market didn't felt anything. So this week was a pretty busy week on the economic agenda for Europe, for US especially, and now today we're going to have the NFP. So I guess that what the Fed say, what Jerome Powell say, the chairman from the FOMC say, the market is not just taking. It's like, yeah, that's it. We know that. We know that you're lying. We know that not going to cut this year. And we know that whatever you do, let's say in the next 3-4 months, because the only cut that the market is expecting is on September. And it's by 3% difference from the not expecting to expecting. So it's quite nothing. So maybe we don't have a cut. And this comes to play. I see you have some nice things here. So please go ahead.
So, and actually, to touch upon based on what you just said, what I find really interesting is that so when in December 2023, when they were talking about the 7 rate cuts, right, they were also talking about the target inflation was to be lower as well.
Mm-hmm.
But ever since then, all these CPI meetings, like the last 5 meetings in a row, have all been higher. So, to me, even the next meeting coming up in May, say that we get a 6th print higher in a row. I'm thinking even more people will start to realize that, oh, maybe we don't see that hike in September, and potentially even general interest will start coming on board to say, gold and metals, which can be some interesting times coming up. And basically, what I have here on the screen is it's all about the Bezel Act. And essentially the Bezel Act. So it was implemented after the last crisis, in 09.
Okay.
And since then, though, in 2017 especially, they started tweaking and changing up the rules for this Bezel Act. And especially now, recently, they've been January 2024. They've changed some rules, and they're looking to keep changing some rules, up until 2025. And to me, eventually, what the rule is going to be, we're going to see more countries like Zimbabwe where their gold reserve backed. And basically, the whole fuss is that essentially the Bezel Act is making banks have more capital, and it's going to be less, less lending, less credit, and more stable backed, reserves. And to me, the only way we get through that, a major portion is obviously going to be gold.
Yep.
So even here we have, as you well know, there's been widespread criticism of the proposal from across many stakeholders across the whole political spectrum. And basically, it's the proposed rules changes would require banks to raise and hold more capital in reserve, which could subject municipal bonds to standardized treatment while driving up borrowing costs. So, at the end of the day, time is going to tell.
So
yep.
basically, it's very interesting, to be honest, because the media is not saying this. The media is not mentioning it. Why?
It's like, to me, I found it very interesting that when gold was reaching the all-time high, the media was not talking about it.
Exactly.
But so it's the couple red flags for sure.
Yes.
Another thing being, right, like the central banks buying for the last 3 years, the fact that the demand hasn't stopped. So, you could say that's another red flag right there, because, let's say that they're truly expecting these rate cuts. Why would the demand from these central banks, still be on gold, right?
Correct.
If we're supposed to be seeing these rate cuts.
Okay.
And right here, I hope the audio plays, but this is a very interesting take from the reporter. So basically, Mr. Kenneth over here is not very, not in too much belief of the Bezel Act.
Okay.
But the reporter asks a very. There's actually no audio on the terminal.
Oh, okay.
That's basically why I had to join from two screens.
Oh,
okay,
right.
so let me.
Yeah, I can't hear, but that's fine.
Okay, so basically, so yesterday's meeting too, Mr. Powell came out and said he doesn't see the stag or the inflation. He has the Feds, the door is open for a July rate cut even. But there's a very, very interesting point here that while no one wants to say the R word anymore, risks of stagflation and a non-consensus Fed hike have been the topics of conversation.
I have on my phone. That's very interesting you touch on that, because wait a minute, let me grab the message where it is, because yesterday, right, so let me read it again. So while no one wants to say the R word anymore, risks of stagflation and a nonsense Fed hike have been the topics of conversation recently. That's really good, because what putting a makeup on top of this, and he's like, no, don't worry, no, it's okay, don't worry about it, okay, don't worry, let's move on, next question. So pretty interesting how this period of time is such a, ridiculous what is happening. We don't have information. We don't, like the big media. Like, I know you have Bloomberg, so you got these informations, but we don't. And this is pretty cool what you're showing. Yeah, go ahead.
So, and I completely agree with this take that they have over here, because it's like, although that, equity markets have been, higher for longer, how long do we actually see this narrative for is the real question now, right? To me, I don't really see it being dragged, much longer, especially the higher for longer in equities. I feel that a lot of people, they're not really talking about the debt where as much as they should be. And that's just, like they say here, if you can't stand the heat, get out of the kitchen, which would mean a strong bias towards, commodities in both, US and Europe, like they say here. Yeah. And that's definitely something I agree with here, less of, say, Jerome Powell's take, obviously. Yes. And I actually have some more interesting data here. So like I was saying, right, we had nearly 1,100 tons in 2022, just in the gold market, with 2023, being a very similar level. Mm-hmm. And so the central banks, obviously, they don't tend to, change their patterns. So essentially, we could see this for the next 3 to 5 years. It's very hard to tell, actually, at this point. And this is another interesting little graph here. So here we have central bank gold buyers and sellers year to date. Okay. So we've had very minimal sellers, and then you got somebody like Turkey, the main seller, where they got 50% interest rates and 70% inflation.
Yes. So you have to do something, right?
110%. But what I find very interesting is that the undisclosed central bank flows were close to 500 tons. So we've had China, Poland, and Singapore as the largest buyers, but the largest buyer was actually the undisclosed buyer at almost 500 tons this year. So
who it is?
Who may be? Exactly. So it doesn't
US is not on the list, right?
No, sir. Very interesting, right? And just to scroll a bit more down, so essentially, yeah, the central bank gold purchases are up 14% year to date, with the third quarter of 2023 being the record since 2000. Wow. So yeah, just definitely you could say this is another red flag, but and then lastly, the dollar strength has weighed on gold since the beginning of July, but it hasn't been, the strongest driver of the metal. Obviously, the physical demand has been. So,
yep.
That's why, we've even been seeing times where, the dollar index and gold are now, in correlation at times.
Yep.
Okay. So
we are seeing the gold price. If you have gold, that's is that gold?
Oh, this is. Give me one moment. That's just.
No, if you can get the gold chart.
Yes.
I want to ask you some questions, because what are we seeing? I know you've traded the gold since $2,030, if I'm not wrong.
Correct.
And then you're still holding some position, so that's very clever. It's very, very nice. So my question to you is, because we are seeing a bit of a pullback, right? We're seeing a bit of a pullback. Do you reckon this pullback can continue to go down? What do you think? Because when we look into all of the data that you just presented to us, it's pretty amazing to see that there is a lot of possibility to keep buying the gold on top of 2024, because there is demand still there. People are still demanding that asset class. So do you reckon this, it's time to continue to long gold, or what is happening?
To So correct. I believe that 2300 is a nice price to, get in at. I also believe that if we were to see any further pullback, I believe that mid 2200s would be the lowest we see. I do not see the 2100 coming back. And just simply due to the demand, I believe the physical demand will keep up, especially from central banks. And that would give no reason for price to even come near 2100, in my opinion.
Right.
I have a very bullish outlook. I'm looking at 2700 to 3K by the end of this year.
Oh, wow. Okay.
So I'm very bullish on gold, especially.
Do you know, because you most probably get some reports from institutions and so on, is that the same thing that they are expecting, like JP Morgan or Goldman Sachs or all of the other big banks, or you
So
don't touch
the
much?
only I forget the name, but there was only one bank that was forecasting 2300 or 2400 by then, or 20 sorry, it was 2500 by the end of the year. That was the lowest forecast coming from Wall Street. Whereas places like Citigroup, they were talking about 2700 as well, which I find very interesting. Same as JP Morgan, they're in the same ballpark of around 2700.
Wow. Okay. There is definitely an opportunity there then. Okay.
Correct. And I can give you a funny example. So I'm Canadian. I'm from Canada.
Yep.
And what happened was, as this Basel Act was sort of being implemented and these rules were being changed, there was only one institution, a Royal Bank of Canada, that actually implemented it in 2021. Whereas all these other smaller institutions, say Scotiabank, Toronto Dominion, and smaller institutions like that, they only recently started, implementing these new rules. So I just find it interesting now that even the smaller institutions like Desjardins they're also coming on board, same as RBC did in 2021. So I find that interesting now as well, that it's pretty much all institutions in Canada on board.
Okay. And okay, so if you wanna, long gold, if you want to buy some gold, there is some options for you to do this sort of trade, right? You can just long one position, or you can do dollar averaging cost. You can go to futures. We were talking one day. We were talking, and you mentioned about the spread difference between the Shanghai futures and the New York futures on gold. I found that very, very interesting. So if you can touch base a little bit on that, I would definitely like to see this.
So essentially, um, what I realized from around February, there was a discrepancy because Shanghai gold. So it is obviously a bit harder to attain gold in China, which creates a minimal gap between, shouldn't be a larger gap than $10.
Yep.
But from February, we were even seeing gaps as large as. So I'll give you the best example. Before New York, gold futures broke 2400. Shanghai gold futures were trading well above. They were trading closer to 2450, whereas New York didn't even break 2400 yet. And this is a type of
Wow.
discrepancy where I've been following the market for a few years now, and I've never seen any sort of discrepancy this large, which I find, you could say it's, another red flag to my list.
Okay. Okay. So
And
just so people don't confuse it, it's a good red flag to continue to long gold, right?
if I see red flags, to me, that is just more bullishness
Yeah. Yeah.
for metals, for commodities,
Nice.
especially because the general interest isn't in metals or commodities yet. So, I find that once the general interest does become interested, that's how we're gonna see that 27 to $3,000 an ounce. Because as of now, it's strictly central banks, you could say, or
Yeah.
mainly central banks, right?
Exactly.
So
Yeah. I think right now the whole interest right now it's from the central banks. Soon as the big mass, the big public starting to see this, because we can't forget something here. Fixed income still paying quite a lot, right? And with a very low risk, they're still paying quite a lot. Fed is paying 5.25. Australia is paying 4.75. Canada 4 point something, 5 point something, Europe, UK. So all of them still paying some sort of thing. But the big problem here is we are close to a cut, and we all know this. When this comes closer and closer and closer, I do believe that the demand from those guys will liquidate those positions on fixed incomes and will transition. So we'll be basically an outflow to an inflow into gold. So an outflow from the fixed incomes to an inflow inside of gold, or even gold-backed as stocks, let's say. So I think we are very aligned on that.
Correct. I completely agree with you on that one.
Nice.
Couldn't have anything to defer about that.
And with that, we come to an end. Thank you so much, Adrian. It was a pleasure to have you here. So if you guys want to know more about gold and the super commodity cycle, the super cycle of the commodities, so then please put down in the comments so I can bring Adrian here again into the podcast. Share this video with your friends, share this content with your friends, and definitely this is higher value for them. All right, guys, thank you so much, and I'll see you in the next one.